Hey everyone, welcome back to my channel once again. First of all, I just want to take a moment to appreciate all of you in my Telegram community and also all my subscribers for the amazing feedback on my last video about the institutional CRT model. Your support, questions, and insights mean a lot to me. And I should appreciate each. And for those of you who aren't yet in the Telegram channel, you are missing out. That's where we dive deeper into these concepts, share trade insights, and go together as traders. So if you haven't joined yet, the link is in the description. Come be a part of the community. So in today's video, I want to take things a step deeper and break down the model for you. We go beyond the basics and look at how institutional, I mean, footprint can help you align yourself, and also how you can refine your strategy and trade with more confidence. Also, if you are new here and you want to learn more about the institutional trading concept, which is the CRT, and how to refine your strategy, make sure to hit that subscribe button and turn on the notification bell so you don't miss any future videos. Now let's get quickly into the video. So CRT, it's helping a lot thanks to the originators of it. They're helping us a lot. Now, the institutional CRT model is how you can use CRT in conjunction with institutional footprint to take trade. Now, first of all, I'd like to talk about the weekly contract or the institutional weekly contract. Now, what we all know that is that the market opens on Monday and closes on Friday. But then from Monday to Friday, the institutions actually take trade or open contract, which is a weekly contract, starting from Wednesday to Tuesday. So actually, if in real sense or logically, we can say that for them the market actually opens on Wednesday and closes on Tuesday. That's how I would say, they view things from their perspective. So now, if you know that for them it opens on Wednesday and closes on Tuesday, now we can use this data in conjunction with CRT to trade or get a more refined strategy to approach the market. Now, this is what happened in the market. On Wednesday, that's when the contract starts, and the contract starts or from Wednesday and ends on Tuesday. That is, they open a contract on Wednesday and then they close it on Tuesday. So on Wednesday is when they open the contract. Now, if you know that institutions are opening their contract on Wednesday, we can use this information as our advantage. Why? Because we know that when the institutions enter the market, they bring a lot of volume into the market because of the size of their, trade. So if you know that institutions are coming to the market on Wednesday, we surely know that Wednesday is when large volume what enters the market. So we can know that Wednesday price action carries a lot of data, which is a lot of liquidity. So it means that Wednesday's highs and lows carries bunch or so much liquidity that we can use as our advantage. Now, on Friday, that for we, retail traders, we view it as that's when the market closes. For them, on Friday is actually when they reevaluate their Wednesday position and decide whether they should continue holding their trend from Wednesday or they should change their mind. So on Friday is actually re-evaluation phase. So what they do on the re-evaluation phase is that they assess the order book, look at their trades on Wednesday, and then evaluate the market and see, okay, should we continue with our Wednesday move or should we reverse our trend? So Wednesday is when they actually decide whether to hold on their trades. Sorry, Friday is when they decide whether they should hold on their trades or they should reverse. Now, Tuesday is when they close the contract, and then another one also opens on Wednesday. So, for you to get the actual data or an accurate data for your analysis, I suggest that you start from Wednesday to Tuesday rather than starting from Monday to Friday. Now, if you start from Monday to Friday, you miss a lot because starting point of the contract is from Wednesday. So we start from Wednesday, we'll be viewing the market on contract basis, which is from maybe contract one, contract two. For there, from there you can have accurate data for your analysis. So now this is how the model works. Wednesday is when they open the contract. So it means that Wednesday carries a lot of liquidity. The highs and lows of Wednesday carries a lot of what? Liquidity. So this means that the high of Wednesday, see, the high of Wednesday and the low of Wednesday is very, very important for the remaining days. That means that the highs and lows of Wednesday carries a lot of liquidity. So there are a lot of liquidity above and below Wednesday. So now this is how the model works. Now, since we know that institutions enter the market on Wednesday, now we expect one side of the market to be swept. That is either the high or the low to be swept. So now if we sweep the high, it means that we are going for the high. If we sweep the low, it means that we are going for the high. In other ways too, if we sweep the high, it means that we are going for the low. So this is how it works, like logically. This is the basis of it. This is the basis of it, how everything should work out. That is on from Wednesday. So when you are starting your trading, you start from Wednesday and you look at what happened on Wednesday, what happened on Tuesday, and what happened on Friday. Now we come to Friday and talk about it, because Friday will actually give you the Monday and Tuesday direction. So Friday will give you Monday and Tuesday direction. So we use Friday to determine the direction of Monday and Tuesday, and we use Wednesday price action to determine what will happen on Friday. So basically, Thursday will be what I will call a confirmation day. So we can decide not to trade on Thursday, but I will show you how you can trade on Thursday using other confluences. So now this is how it works. Now CRT is what we expect to form on Thursday. So Wednesday accumulation, Thursday a sweep, and Friday distribution. Now I would say there are two main things that you have to consider on Wednesday. That is, if you want to trade on Thursday. You see, now the much safe way is to trade on Friday. Understand? So you can even catch the trade from Friday, right from the beginning to Tuesday and to Wednesday. Then you wait for Monday and Tuesday again. But then, as I said, for you to trade even Wednesday and Thursday, there are so much confluences that has to come to place before you can take trade from Thursday. Now, this is what will actually at times happen in the market. Now, on Wednesday, if you get accumulation on Wednesday, now for you to trade on Thursday, what you have to do is look for a key level above or below. Now, this is very, very important. If you don't see this, relax. You have to look for a key level above or below the high in the low. So you have to get a key level above or a key level below. Now, this is where you wait for price to tap. Now, if you are looking at this key level and this key level, now this key level can be in the form of fair value gap or an order block. Those are the two main PD arrays that I trade. That's the ICT PD arrays. I trade only fair value gap and order block. Those are the most things, the two key levels that I trade. So now, when you see accumulation on Wednesday, on Thursday, you expect one side of the market to be rated, which is if it is the high, you wait for it to tap into a key level. So on Thursday, you wait for the market to sweep either high or low. So in this case, the high, and for it to tap into a key level. Now, when you tap into a key level, which is either a fair value gap or an order block, and you have to confirm volume over here. That is, you have to wait for a market structure shift or an order block to form right here before you take the trade. Now, when you take a trade here, that means your target should be barely the low, or so the low of Wednesday. That is your target. Now, in other ways too, if you took you sweep the low, which is here, you wait for another block to form or a fair value gap to form, then you take the trade from Thursday right to Friday. Now, in other ways, if Wednesday we didn't see any accumulation, but rather we saw an expansion on Wednesday into a key level, probably that day, that Wednesday might be the high of the week. Now, here's how it works. Let's say on Wednesday, we saw the price moving up aggressively into a key level here. Now, if you see that, it means that we are reacting or we are coming from a key level, which is a fair value gap or an order block over here. Now, possibly that Wednesday can be or might be the high of the week. So on Thursday, what you have to do is just look for a continuation in the opposite direction or in the direction of the key level. Then you target the low of Wednesday. If it is very true, you target the high of Wednesday. Now on Friday, this is when things get interesting and much more sweet. Now on Friday is when they reevaluate the market and say, okay, should we hold on to our Wednesday trend or we should change our mind? So Friday will actually tell you where Monday and Tuesday will go. So most of the times, either Friday will react to a key level or an order block or a fair value gap created on Wednesday, or it will rather react to a key level opposite to the one formed on Wednesday. Now, when you get to the chart, you get to understand them very much better. So now, let's say this what happened. On Wednesday and Thursday. So maybe price was not able to complete the target, which is the Wednesday low. Now on Friday, this what happened. Either this on Friday, either Friday we tap into this key level here and complete the target, or we will not tap into any key level, but rather we will continue and then maybe tap into a key level which is opposite to the one formed on Wednesday. So this is a bearish key level and this is a bullish key level. So now if Wednesday we tap into this key level right here, it means that probably they want to reverse the trend. So Monday, Tuesday, we can expect a bullish move. On the other hand, if it reacts to this key level, then it means that Monday, Tuesday will continue the trend. So that's how the model works. Now let's get straight to the charts and then look at real examples. Most possibly what happened in this previous trading session. Okay, so you're on the chart and this is this last 2 weeks price action. So now this is Wednesday. Now on Wednesday we had an accumulation over here. As I said, there was a fair value gap over here. I think on the daily time frame there was also another fair value gap over here. This Thursday, now Thursday swept the high of Wednesday, and then we closed in the range of Wednesday, that is CRT. So CRT formed on Wednesday. Now the reason why this thing happened is because, as I said, there was so much orders in this zone here, which is on this Wednesday price action over here. There was so much liquidity over here. So when we ran the high over here, price dropped. You see, so now when we see this, it means that there was so much order or so much liquidity over here that was run here. And what we will do to confirm this liquidity or this drop over here, that whether it is going to continue or not, is, as I said, you have to wait for confirmations. That is, you wait for an order block to form or a fair value gap to form. Now in this our case, we had order block formed over here. So this is your order block here that have been formed. Where's order block here? OB. So this is your order block here that has been formed. Now where's another block? Now this candle, this bearish candle here, tap into the fair value gap. Now the candle that tap into the fair value gap was displaced by the next candle. That means that this candle is confirmed order block. So we expect price to trade into it and then what, drop. So this is what happened on Thursday. So on Thursday, we served the Wednesday high from CRT, order block was formed. Now Friday, we expect a pullback, or a pullback into the order block that was formed here and a drop. So Friday, we pull back into this order block here. As you can see, this order block here that was formed. So Friday, we tap into the order block and price dropped. Now, as I said, now Friday will tell you what Monday and Tuesday will go. So since Friday tapped into this order block here, definitely now I have my target over here. This is I will talk about this right now though. This one is also another secret of the institution. So actually, if you want to become more profitable, then you have to follow the big banks or the institutions, because they are the ones that move the market. So if you know their footprint and you follow them, that's when you can have so much confidence in your trade. So this was my target, and I remember sending this trade to my community, Telegram community. So that was just last week. I was expecting a small pullback and then a drop here on Monday and Tuesday, but unfortunately price opened with a big gap hitting my target already. So I missed this trade because of the gap that was open on Monday. So I didn't get this sell right here because I knew that okay, Wednesday there was a bearish accumulation over here, and then on Thursday we swept the high, formed an order block, and Friday trade right into the order block, and saw this sharp move down here. Means that there was so much what sellers coming in the market. So when I saw this, definitely I knew that. Of course, we caught this sell from here. We caught this sell with my Telegram community. We caught this sell. So on just last week, we were expecting a pullback, just a pullback here and then drop. Why are we expecting a pullback? Now this candle here tap into this order block, and that candle that tap into other block was displayed. That means that this candle here is our order block here. I think I've also made a video on how to pick order block using CRT and CISD. So that candle that tap into the fair value, sorry, into the order block here was also what displayed. So that means that this candle is our order block. This candle right here is our order block. So when the next candle trade into it, you can expect a drop. So now there was so much sellers now in the market that the market has to open with a gap on Monday. So on Monday, I remember calling out this buy too. So as I said, if you're not in Telegram community, you are missing out a lot. So the link is in the description. You can check it out and then join the community. So I called out this buy here on 0 USD. So this is what we were looking at. So Monday, Tuesday, there was a buy here, and then on Wednesday, so now this is where things got interesting. As I said, Wednesday is when the new contract opens. So on Wednesday, this is what happened on Wednesday. Now what are we seeing over here? On Wednesday, when price opened, we tap into this fair value gap here. I don't know whether you are seeing it. There was a fair value gap here. So when price opened, Wednesday opened from a fair value gap straight into a key level, which is this order block here. Let me remove this one. This order block here. Now after we tap into that order block, what happened? We formed an order block in the order block. this high or this candle that tap or displays over here, that is your order block. So it means that this is what happened on Wednesday. Now on Thursday, you expect a continuation from there. Understand? As I said, if Wednesday tap into a key level, it means that that Wednesday will be the high of the week. Understand? So it means that the next day, which is the Thursday, will actually start the distribution from there. Now Friday open straight away, we tap into the order block formed on Wednesday. That means that they decided to what, continue their trend from Wednesday. So Wednesday will set the table and Friday will start the ride. So what Friday will do to Wednesday will tell us what Monday and Tuesday will be. So now with this information, on Monday I'm expecting a pullback into this zone here and a drop barely to this side. Now what am I looking for? I mean a pullback into this zone. Now this is the candle that tap into the order block here. Now that candle was displayed over here, so it means that this whole candle is my key level. So if we trade or if we pull back into this zone anywhere from above this vertical, so horizontal line here, anywhere from here I can look for sell from there. So when we tap or we trade back into this zone, I'm going to go to 15-minute time frame and wait for an order block or a fair value gap to form. Then I will take this sell probably for Monday and Tuesday, and then Wednesday I'll look at what price what we'll do again.